Thatcher Taylor, ProPath Financial. Welcome back. YouTube channel. We're going to talk about Social Security statements. We're going to try to take all the pieces that are important from the Social Security statement so we can get a little bit smarter and know what's going to come to us in the future as we plan for our retirement. All right, here we are. You can see my screen now. First things first, if you don't have a Social Security statement, go to ssa.gov. Right here, you can see it. Click sign in or sign up. My Social Security, and you can start the process. You can see here, I've already got a username and password. I'm a young cat, but I've already got my Social Security set up and ready to go so I can check it out, check my earnings history, which we'll go over. But this is a great place to start. Be aware of your Social Security statements. I've heard about people not getting the proper Social Security reported on their statements for their calculation for their future benefit. So check your statements. It's very easy to do. So what I've done is I've pulled Wanda Worker. It's just a simple statement that's at ssa.gov, Social Security Administration.gov, that we can go through together. So let's look at a few things that are really important. Sorry if you hear the dogs in the background. Want to see the guy? Want to see the guy? Is a Buzzy. That's Buzz right there. So sorry if you hear Buzz. All right. So Social Security statements. You can see in the top right-hand corner, it tells you what your benefit would be at full retirement age. Make sure to check your address too. Check the dates. It gives you a little bit of information and links that you can go to. But this is the amount that you receive at full retirement age. Not when you first get to take your benefit, but at full retirement age. As you can see here, there's even more benefits that come into play. So this is where Social Security planning becomes very important. You can start to take benefits at age 62. The latest that you can take benefits, or I should say the maximum amount that you could receive, is at age 70. But your full retirement age most likely is age 67, unless you were born before 1960, then it's 66 and something months. But in general, now as we get a little bit older, it's going to be age 67. So here's what it looks like. Over your time of working, you pay most likely into the Social Security Trust Fund using credits. And depending on how many credits you get, I should say that once you get 40 credits, you're eligible. But depending on how much was paid in based off your average index monthly earnings over your highest 35 earning years in your life, that's what creates your benefit. That's how these numbers are calculated. In another video, we'll calculate that. But at full retirement, age 67, you could take $19.86 a month. If you waited till 70, you could take $24.68 a month. If you took it at 62, you would take $1,376 a month. You can clearly see the advantage of waiting and you getting a bigger benefit. But in particular situations, sometimes taking it early makes sense. If you don't think you're going to live very long, or you want to ensure that you're going to get Social Security, whatever it may be, emergency situations require you to, you need to make sure that you're taking it at the right time. But most likely waiting to full retirement age is usually better. If you have disability, you qualify for benefits, $1,900 a month. Here's some family and survivors benefits. You've earned enough credits for your family to receive survivors benefits. You die this year, your child will receive this amount. Your spouse who is caring for a child will receive this amount. Your spouse, if you pass away, will receive that amount, which is your full retirement benefit minus a little bit extra, minus a little bit less. But your total family benefits can't be more than $3,500. Here's how it works. We base your benefit estimates on these facts. Your date of birth was after 1960, so that means your full retirement age is 67. Your estimated taxable earnings per year after 2018 is $50,000. Your Social Security number, yours probably doesn't end in 1, 2, 3, 4. But your estimated taxable earnings are adjusted over inflation for your lifetime. So basically, for example, they take your average index monthly earnings that I mentioned over your highest 35 earnings years, add them all together, divided by the amount of months in 35 years, and that comes up with your average index monthly earnings, indexed for inflation. So here's what I mean. Here's a person's earnings record. It comes right on your Social Security statement. This is the amount of earnings that was taxed. So you can see in 2018, Wanda was made $50,000, and that was the amount that was taxed. You can see in 1976, it was $226, but your dollar in 1976 is different than your dollar in 2018. So there's a chart, and I think it's starting this year, it'll probably be around 10 or 11, where you take this number and you multiply it by 10 or 11. Where in 2017, you take that number, you multiply by like 1.13, averaged index monthly earnings. After they index all of these earnings with the proper multiplier, they take that average, and that's what comes up with your future benefit. I'll do that a whole nother video showing this. But this is what calculates the benefit that you're going to receive in the future. A couple things you need to be aware of. It's right here on the statement. Windfall elimination provision. If you receive a pension from employment in which you do not pay Social Security taxes, state, federal, local governments, sometimes they don't withhold your FICA, your Social Security taxes from your paycheck. So if in the future you receive a pension, because they put that money in a pension most likely, you receive a pension from the state, federal government employee, and you want to try to receive your Social Security could potentially be reduced. The windfall elimination provision applies to your own benefit. The government pension offset, which is similar, applies to a spousal benefit. So you could potentially, as a spouse, apply for half of a spouse's benefit in retirement. The government pension offset would reduce that spousal benefit if you applied for it. The windfall elimination provision will reduce your own benefit if you apply for it. So these are some decisions that you need to make if you have a pension coming and over the life of working at that employer, federal, state, or local government, or whoever it may be, and they didn't pay into Social Security taxes, you could have some decisions to make. So do know that you need to be aware of some of these decisions as retirement comes. So you check out your earnings record right here. Currently, you and your employer each pay 6.2% Social Security tax up to $137,700 of your earnings, and a 1.5% Medicare tax on all of your earnings. If you're self-employed, you pay the combined employee and employer amount, which is a 12.4% Social Security tax on up to $137,700 of your net earnings, and a 2.9% Medicare tax on your entire net earnings. If you have earned income of more than $200,000, you must pay an additional 0.9% more in Medicare taxes. So this essentially means you're going to pay taxes up to this threshold amount, which is going to be different as it adjusts for inflation. But you need to know that when you work for an employer and you pay your tax and you get your paycheck stub, take a look at it, your FICA taxes. That's where the taxes are coming out and contributing to this trust where they build up the 40 credits required to receive Social Security benefits. There's some things that you can do to keep your earnings record accurate. Just some notes here, and then some facts about Social Security. Do know one piece of this that goes unnoticed. If you receive your benefits and you still work, you could potentially have your benefit reduced for earning more money than a certain threshold. I think the number for a single person is $18,340. Don't quote me on that. Does it say on here? I don't think it does. But if you make more than that, your benefit is reduced by $1 for every $2 of earnings that you had. So you could still see a reduction in benefits if you're making money, especially if you take your benefit early. But there are a bunch of features to this. Plus, your benefit could be taxed. If you make above a certain threshold, you could potentially be taxed as well. So there are details that need to be addressed as you make these decisions. If you're thinking about retiring, here's some things to consider. This is all really interesting stuff and things that you can read up on. Receiving benefits while you work. Let's see if this discusses anything. It doesn't say specifically about the numbers. We would have to look those up. But here's something that's interesting I want to go over. If your full retirement age is 66, benefits will reduce 25% at age 62, 20% at age 63, 13 and a third percent at age 64, or 6 and a third percent at age 65. If you take early retirement, you can see how it's reduced, but that's something that we discussed up here. If you take it early, it's reduced quite a bit, and that number is stuck there. Unless there's an inflation adjustment, which there are usually, that number is essentially there. So you need to really be aware if you take your stuff too early. If you have any questions, feel free to reach out to me. I love doing research on this and trying to find ways for you to maximize your Social Security benefit. I also have a financial planning software through Right Capital that can help out. If you like this, make sure to subscribe, hit the like button. Let's keep growing this channel together. Let me know if you have any questions. Thanks for listening.